Hello, welcome to Best School Online Tutorial. I am Abaku Gracious. Last week we treated credits, and today we'll be looking at profit. Now, last week we talked about credits, where we looked at the meaning of credits, types of credits, sources of credit, reasons people take credit, and the advantage and disadvantages of credit to both the buyer and the seller. Our specific objectives for today are: one, at the end of this class, we should be able to define profits, state the types of profit, differentiate between net profit and gross profit, and state factors affecting profits. Profits is the financial benefit which is accrued to a businessman. The original intention behind every business is to make profits. And profit is one of the way of measuring the progress of and the performance of a business. And then we'll be looking at definition of profits. To the layman, you can simply see profits as the money he gets after a business. Now, to an accountant and to an economist, they have their view of what profit is. Now, first, let's consider the accountant's perspective. He sees profit as the excess of income over expenditure. The excess of income over expenditure. This is how he views profits. Now, profit here to the accountant is of two types, which is gross profit and net profit. And as we go further, we'll definitely look at the meaning of gross profit and net profit. And then to the economist, he sees profit as the reward to an entrepreneur. Remember in economics, we have some factors of production where we have land, labor, capital, and entrepreneur. And each of these factors of production, they have their reward. To an entrepreneur, his reward is seen as profits for coordinating other factors of production and also for taking a risk. So the reward he gets at the end is to him a profit. This is the economist perspective of the term profit. Now let's look at types of profits. We have two types of profits. We have the gross profit and also the net profit. Gross profit here implies the total profits, the aggregate profit, or the overall profits that a business makes at the end of a transaction. Now, it says here the difference between the selling price, cost price of particular products. Now, talking about the gross profit, like we said earlier, it has to do with overall aggregate or total profit that a business makes. Now, to calculate gross profit, you can simply say sales minus cost of goods sold. There you get your total profit. Very good instance, Mr. A purchased, let's say, a sachet or a bag of sachet water, and then he purchased it for 100 naira and sold it for 180 naira. At the end, we can see that he has made a profit of 80 naira without considering other expenses he must have or he might have incurred. And then we have the net profit. The net profit here has to do with the actual or the real profit of a business. Here it says the net profit is the excess of gross profit over the expenses. Now, one thing about net profit is that it tells us the real profits of a business, unlike the gross profit that only give us the overall profit of a business without considering expenses that must have incurred during that particular business. Now, Mr. A, still using that same example, purchased a sachet or a bag of sachet water worth 100 naira. He sold it for, let's say, 180 naira. The profit he generated was 80 naira. And along the line, he incurred certain expenses on food and transportation. Let's say transportation was 20 naira and food, on the other hand, was 20 naira. And that will give us 40 naira. So if we are to get our net profit, it's going to be the 80 naira minus 40 naira. That will give us our net profit. So to get our net profit, we can say gross profit minus expenses. And then we have trading profit and loss account. Trading profit and loss account. This is an account that is drawn to show the gross profit and net profit of a business. In accounting, we have different type of accounts. Might have the different type of accounts, so to say. Now, here we have some of the contents in this trading profit and loss account. First, we have the opening stock. Stock here refers to goods that is available. So talking about the opening stock here, it has to do with the goods available for sale at the beginning of the year. On the other hand, we have closing stock. Closing stock has to do with what? The goods that are available for sale at the end of the year. Then we have purchases. Purchases here implies those goods that are bought by a firm for sale. So it is the total value of goods, both credits and cash. Now, you know, some of these businesses, or yes, some businessmen or businesswomen, definitely they don't always buy their goods or wares with cash. Sometimes they buy on credit. So irrespective whether credit or cash purchase, they fall under purchase. And then we have sales. Sales implies total value of goods sold by a business firm. You know, let's say at the end of the day, after you must have made some transactions, all the sales you have made during that day, they are all referred to as sales. So the total sales or the total value of goods you must have sold for the day or during a particular period of time can be referred to as sales. Then we have return inwards. Return inwards, yes, sometimes we have some customers that will return goods for some reason best known to them. Maybe they are not satisfied with the standard, or maybe the goods had some kind of faults, and then if they have the right, or since it is their right, they will choose to return it. And when such goods are returned, they are referred to as returned inward. So goods that return back by a customer to a firm is referred to as return inward. It is usually deducted from the sales for the period. Then return outward is the opposite of return inward. You know, as a firm, sometimes there are goods you purchase from the supplier which you are probably not satisfied with, and you have to return it back to the supplier. Now, such goods are referred to as return outward. They are usually deducted from the purchase of the period. And then we have the carriage inward. It is much more concerned about transporting of goods. So carriage inward has to do with the cost of transporting goods to the firm. Now, when you buy goods from a factory or from the industry, the cost of moving that goods from that factory or industry to your firm is known as carriage inward. It is usually added to the purchase. And then we have the carriage outward. This is the cost of transporting goods to customers. A very good example, we have this Coca-Cola company. You know, they have their trucks, and you see them moving from one shop to the other, trying to supply their customers goods. Now, this can be referred to as, let's say, after sales service. You know, one of the after sales service is transporting goods to the destination of the customers. So carriage outward is usually the cost of transporting goods out of your organization to your customer. Such is treated as expenses. Then lastly, we have expenses. Expenses refers to expenditure that is incurred in running of a business. Now, remember, while I was explaining net profit, I told us that during the time you are trying to sell particular products, or during the period you are trying to sell a particular product, one way or the other, as a businessman, he or she will definitely incur some expenses, let's say on food or on transportation. Just like we have in the carriage outward, which is the cost of transporting goods to customer, such can be referred to as expenses. Now, expenses is often minused or deducted from our gross profit to give us our net profit, which is the actual profit. And then let's look at the uses of trading profit and loss accounts. What are the uses? What are the benefits? Why do we have to, open an account known as trading and profits accounts or trading profit and loss accounts. First is to show the profits. Now, this account enables us to know if a business is making a profit or not. For planning purposes. Now, remember when I said earlier that profits is one of the ways of measuring the progress of a business. Now, when a business is progressing or when a business is expanding, now one of the ways you can tell is through this account. So this enables you to plan. Let's take for instance your first year. Let's say you're able to make a profit of, let's say, 100 naira. Then the following year you made a profit of 200 naira, and you can see the way it is moving in arithmetic progression. Such can enable you plan for future for future venture, either for you to expand or to reduce your purchases. And then for income or corporation tax purpose, you have some government agencies, they are into tax collection. So by the time they visit, one of the ways they can tell the progress of your business or to know if you are making profit or not is through this account. So you can easily refer to them, and then it enables them to know how they are going to tax your business. Then for comparison with other years, such account tells you the rate at which your business is progressing. If your business is progressing or not, or the rate at which it is progressing. This is what this account helps us to do. And then we have factors affecting profits. One of the factors affecting profit is the selling price of goods. If the price of good is high, your profit definitely is going to be high. But if the price of the good is low, your profit will definitely be low. So the price of the goods, one of the ways that determine the profits you are going to make in a business. Now, the cost of goods sold. Now, here looking at the cost price of producing that goods. Now, if the cost price of producing a particular good is very high and the market price of that good is low, it is going to affect the profit you will generate. On the other hand, if the cost of producing that good is low and the market price of that good is high, your profit is going to be high. Thirdly, we have the number of competing firms. Let's say we have about 5 firms that are selling the same product with you. And since there will be much competition, it is definitely going to affect your sales, because if they come to patronize you and let's say they are not satisfied with your price, and they have other firms that sell similar product with you, and those firms are ready to beat down the price, definitely it means it is going to affect your profit, because your turnover or your sales is going to reduce. Then the relationship between demand and supply. Remember in economics there we said that the higher the price of commodity, the higher the price, the lower the demand. On the other hand, the higher the price, the higher the supply. So the price in this case tend to determine demand and supply. Now let's look at it this way. If demand exceeds supply, of course it means that there's going to be much sales. Definitely this implies that there will be an increase in profits. But if supply exceeds demand, which is to say that you have much stocks but the demand for it is very low, this definitely will affect the profits of the business. So it means that the profit is going to be low. Then lastly, we have the knowledge of the seller concerning the market. Now, it is very good, very important that as a business person, you have good knowledge of the market you are trying to penetrate. This often affects the turnover of a business. If a businessman should go into a business he has little or no idea of, definitely the customers may not demand for such products. If a businessman should, let's say, supply a certain commodity to the market, whereby the market is not in demand for that commodity, what happens is that there is not going to be a high turnover, because this is not a commodity that is demanded in the market. So having a good knowledge of what the market needs or what the market demand, this will go a long way in determining if, as a seller, you are going to make much sales. Therefore, knowledge of the market as a seller is very, very important. Thank you for your attention. The next class, we'll be looking at some of the ways of calculating gross profit and net profit. So the next class as well, I'll be giving you assignments so that you can actually know how to calculate net profit and gross profit on your own. Thank you for your attention. I do hope you enjoy this tutorial. Do have a wonderful day, and please try and stay safe. God bless you.